let's talk about precious metals. Gold prices have finally hit a pause after months of unstoppable gains. The precious metal, which has been breaking records all year, faced its sharpest single-day fall in over a decade. After climbing steadily for months and reaching record highs, gold's rally took a sharp turn this week. On Tuesday, gold prices dropped by about 6.3% in just one day, its biggest fall since 2013. The metal had touched an all-time high of around $4,400 per ounce on Friday. Yesterday, it fell to nearly $4,082, marking a major correction in the global precious metals market. So, what led to this sudden fall? Several factors come together at once. The most immediate reason was profit-taking, when investors sell assets after a long period of gains to secure their profits. Gold has risen nearly 60% this year, driven by economic uncertainty, expectations of lower interest rates, and heavy buying by central banks. Many investors who had entered early in the rally saw this as a good time to book profits. The second factor was a strengthening of the US dollar. When the dollar rises, gold becomes more expensive for buyers using other currencies, which usually leads to lower demand. The dollar climbed by about 0.4% this week, adding pressure on gold prices. At the same time, geopolitical tensions eased slightly, particularly between the US and China. Reports of improving trade relations and a planned meeting between Presidents Trump and Xi Jinping boosted confidence in global markets. When investors feel more optimistic, they tend to move money from safe assets like gold into riskier ones such as stocks. This shift in sentiment reduced gold's appeal as a safe haven. Silver followed a similar trend. Prices dropped by nearly 7.5% to around $47 per ounce on Tuesday, one of the biggest declines in recent years. Like gold, silver's fall was also triggered by profit-taking and a stronger dollar. However, silver's long-term outlook remains supported by its industrial use, especially in solar panels, electric vehicles, and AI, which continue to drive demand. Despite this sharp correction, analysts say the overall outlook for gold remains positive. The metal is still up around 55% this year.
Back historically as to why gold may be reacting the way it is right now. I think 79.80 and 2010, 2011 were two indications or two similar periods of time where gold doubled, and then over the ensuing couple of years, it declined over 50%. Both of those were periods of times that were, completely analogous to what we're seeing right now, which is kind of the debasement trade, where the printing of money and the deficits have certainly played a big role in the advancement of the gold geopolitical uncertainty.
Now, many of the factors that supported the yellow metals rise, like inflation concerns, uncertainty over global policies, and central bank buying, are still in play. In simple terms, while the fall looks large, gold is merely returning to the level it traded at less than 2 weeks ago. Traders are now waiting for US inflation data due on Friday, which could influence the Federal Reserve's next interest rate decision. A possible rate cut of 0.25% could make gold more attractive again, as lower rates generally weaken the dollar and push investors towards assets like gold. For now, the precious yellow metal is still making losses. Gold prices are trading around 1% down today as the overall rally of the precious metal takes a breather. And now what remains to be seen is whether this drop from the peak is just a short-term correction or the start of a deeper decline like the ones seen after past booms.
Want the facts?
The latest developments?
News that gets straight to the point.
Well, we've got all three just for you. This is Firstpost Live, a brand new show, your window into what really matters.
Don't miss it.